Hello and welcome to this Bloomberg Quint Facebook Live. It's the end of the year, but it's no ordinary end of the year. We're not all away on holiday, sitting on some beach and enjoying a cup of coffee. We're all still sitting here trying to understand what the decision taken by the government on the 8th of November is going to do to our economy. In case you're wondering what I'm talking about, it is of course the withdrawal of the 500 and 1000 rupee notes. The exchange deadline actually ends now. From here on, we will of course hopefully move towards normalcy, but it's not going to happen very quickly. We have about a month and a half that has passed, and we have some economic data coming in, not a whole lot. But let's try and assess what we can from that data that is available and try and gaze into the future. Dr. Ajay Shah of the NIPFP has kindly agreed to join us. Sir, thank you so much for coming in this morning on Bloomberg Quint. Appreciate your time. Sir, I guess, the first thing I want to ask you is that, we've got some little bits of, half data that have come out. Anything that you're focusing on which can give us a glimpse into how the economy is responding? The finance minister yesterday chose two issues. He said that tax collections have been normal and the sowing data has been normal. So, we're looking okay. But surely there are other data points to look at as well, sir.
There's not many good data sources in India, and we are all struggling to figure out what is going on. One more problem is that many of the data sources release with a long lag. So we're standing today on the 30th of December, and we're asking the question, what do we know about November? And the answer is, we have some limited information about November. One industry which produces good data is the automobile industry. So you get good data about cars, about trucks, about two-wheelers, three-wheelers, and so on. And I find it very interesting to compare and contrast what is happening right now in the present demonetization crisis against the September 2008 Lehman crisis. Okay, so let me just compare and contrast what we saw in both these. In the Lehman crisis on the weekend, 15th of September 2008, all of us saw something happening far away. There was a bankruptcy in New York. And in a way, nothing much changed on the ground in India. So indeed, you see that in September 2008, not much happened. The real impact on the economy showed up in October, November, December. So in October, November, December, there was a big hit to the sales of cars, of trucks and two-wheelers and so on. And then there was a hit to production. Okay. In this case, the demonetization event of 8th of November materialized in every household, every family, every location of India immediately. So right from 9th of November, the impact was here. What do you see in the data? We see that there is a significant impact on the sales of two-wheelers and three-wheelers, but not of cars. So it's interesting that, maybe poor people who are more likely to buy two-wheelers and use rickshaws were more immediately affected, whereas rich people who buy cars were probably not immediately affected. So car sales goes through with a nice positive rise in November 2016. Now, the second part of the story will be in production. That at first, when there is a change in sales, the companies cannot do anything because production planning has been done quite some time ahead of time. There are raw material deliveries that are coming. You give an instruction to a ball bearing manufacturer. Within a lag of a couple of weeks, he gives you the ball bearings. So in the short term, production cannot be changed. We will see the impact on production in December. So I think by January, we will start knowing what was happening to production in December.
Consumption part, like you said, auto is one sector where we get some high frequency consumption data. Then there was the farm sector. Do you make much of the Rabi sowing data? Because that is actually showing that there wasn't an impact on the sowing patterns, at least so far the data seems to suggest that.
That is indeed true, though we have to wonder and ask, what's the counterfactual? So hypothetically, I'm not an expert on agriculture.
Sure.
Hypothetically, we had a good monsoon in October. There was late rain. So potentially the conditions in terms of sowing were a little better. Another factor that we should be thinking about is that were there bottlenecks on seeds, on fertilizers, on agricultural inputs. So sowing is not all the same. It depends on the kind of resourcing that goes in. So if there were people who were feeling liquidity constrained, were they sowing in less efficient ways? So we don't know the answer, but I'm just saying that yes, it is good that the sowing data is nice, but we do need to think about the counterfactual and we do need to think about the inputs.
Before I move to slightly wider issues, so what is your gut feel in terms of the extent, maybe not the extent, but the period of impact? Are we saying the March quarter will definitely be impacted? Probably the June quarter would also see some impact?
So Many people have the intuition that on 8th of November there was a shock, and after that we have been healing. So think, for example, look back at the 26/11 attack in Bombay. On the 26th and 27th of November, we had a shock, and after that we healed over some weeks. We got better. That is not a correct description of what has happened in this shock. On 8th of November, when the announcement came, all over the country there were 500 and 1000 rupee notes, and many people continue to keep using them informally. So, you and I are friends, we would accommodate each other, we would continue to use those old notes. And the supply of new notes started. The old notes went away all the way till today. So, actually, this end of December is the highest point of the shock. The harshest shortage of currency in the country is today. It's today and tomorrow, where all the old notes have been sucked out and a modest quantity of new notes has been put in. So this is the bottom. End December, early Jan is the bottom. And from here, we will heal. Now, how will we heal? There are two parts to the story. The first part is, when do the notes come back? Okay, and there are various estimates. On one hand, people worry that 2000 rupee notes are not quite good enough. On the other hand, people think that now the printing presses are running three shifts. So there's a larger volume of notes being printed than was possible in the earlier period. And then there is a countervailing factor, which is that all of us are now going to hold more cash. Okay, we don't trust the world. The ATM cannot be trusted anymore. All of us will be holding higher cash. So demand for cash will probably go up. So there are multiple conflicting factors. My opinion is maybe by February, March, cash conditions in the economy will be restored. So this is part one, that the cash shock is November, worsening in December, getting better in Jan, Feb. By March, we're pretty much done. So it's a 4-5 month journey to get the cash problem done. But that doesn't mean that the economy is healed. Through these 5 months, various people are disrupted. There are people who are thrown out of job. There are companies who have failed on contracts. There are companies who have gone bankrupt. All this is the deeper lingering problem which will go on for much longer. So, for example, think about investment. The present events make uncertainty higher. People feel we don't know what's going to happen. There is higher uncertainty. There's also higher policy risk. Everybody worries that, a government that did this, what else can they do? So there will be a little more of a wait and watch, and that will have an adverse impact on investment. So there are many effects that are playing out. The narrow cash story is a 5-month journey, I feel, that by March we'll be okay. But the deeper impact on the economy will be much longer.
See, there have been some suggestions from the governments, which lead us to believe that they may actually not replenish the entire sort of cash supply, and some sort of a short or a level of cash supply will be regulated. Can you do that? I mean, do you not supply cash based on the need rather than supply cash of a certain amount and then expect need to adjust to that? I mean, how does one think about that?
So we've seen this in the past. There used to be cash shortages in India. So if you go way back into history, Ministry of Finance got into the business of printing notes because there were persistent failures on the production of enough notes. There used to be complaints all over the country that there's not enough cash. And so I personally feel you can't control that. How much cash do people demand is coming from the hearts of people. If you and I feel that to be safe, we need to hold more cash, it will show up somewhere. There will be constant complaints. There'll be a black market. There'll be a premium for cash. And over time, the factories will keep on printing cash. So my sense is that you will get the amount of cash in the economy that the economy wants. We don't control that.
This is Dr. Shah on whether a lower cash currency in circulation to GDP ratio benefits economies or not globally. Has there been any sort of trend established on that front? Is there anything we should look for in that ratio, sir?
There are countries where there is a lot of cash. For example, Japan. Okay. Japan is a great country. It's one of the highest GDPs of the world. It has essentially zero corruption, but they use a lot of cash. It's there's something about Japan that they use a lot of cash. There are countries like Sweden where there is practically no cash. My favorite story is that some bank robbers broke into a bank late in the night and they found no cash because there is no cash in Sweden. So imagine breaking into a bank branch to steal the bank and finding that there is no cash. Yeah. So it's simpler, it's frictionless. I was part of the work in the equity market where we got rid of physical share certificates, floor trading, everything works electronically, and that is great. But I also respect the fact that different people might see this differently, and these things are slow, long processes. So, for example, the demat process on the equity market took 10 years. So it requires perfect execution of policy, and we are far from done on payments. I think there are huge problems in payments policy. But assuming you do perfect execution on policy, I think these are 10-year journeys, and each person is different, and it's your birthright how you want to do it. So I'm a kind of person that will always go for a more digital thing. But I respect the fact that there are other people who might like cash. And one more thing we have to constantly keep in mind is questions of privacy and civil liberty and all that. You need to be a Swedish quality democracy to feel safe about a lot of digital trail about yourself being left around. So we need to do a lot more in terms of building India as a liberal democracy with privacy, with checks and balances. So for example, in India, to tap my phone, you don't need a warrant. For the authorities to look at my payments, my activities using my debit card or my bank account, they don't need a warrant. Now that's very uncomfortable. So a lot of people will continue to prefer to remain away from state monitored structures because we don't have adequate checks and balances. So I think privacy law is an urgent need, and I believe Department of Information Technology has just begun work on that kind of thing. But really the test will be that is a state agency, is a law enforcement agency obliged to get a warrant from a magistrate in order to obtain a wiretap or information from my financial statements. Until we get to that, we as India, I feel, should be a little skeptical about going to Swedish levels of cash. Swedish levels of cash require Swedish levels of democracy.
Push, but you're saying it has to come with a ecosystem, wider ecosystem being created.
And that ecosystem is about liberal democracy. We need protections of individuals. We should all be safe when we think about the state. That's not how things are in India today.
Which we discussed last time, it was, I know you said it was a side issue, but it does look like that the government is going ahead with an ordinance which would extinguish these liabilities. I mean, that seems like it's happening. So what are we looking at? We're looking at an attempt to get a special dividend. What would you make of an ordinance which extinguishes these notes as of a date, sir?
So as I said last time, the legal analysis is clear. By notification, what you can do is you can interfere with cash as legal tender, but you cannot extinguish the promise of the RBI governor. The RBI governor has signed that I promise to pay the bearer 500 rupees. The only way to extinguish that claim is by an act of parliament. That is what was done in 1946, that is what was done in 1978, and that is what is now being done. So what I was saying last time was that the legal instruments issued by the Ministry of Finance were not adequate for extinguishing the claim of a citizen to show that note and go to RBI and say, give me 500 rupees. You need an act of parliament, and the ordinance is a step towards that. So what it boils down to is that to the extent that there is cash which does not come back to the RBI, there would be corresponding assets that are sitting inside RBI that can be paid out as a dividend.
Sir, I mean, it's not entirely clear whether it would go into a capital reserve, but I assume even if it goes into a capital reserve, there would be some way of channeling that across to the government.
So in my opinion, the economics is quite clear. The Reserve Bank of India is not a fiscal agent. He is a central bank. It is not his job to hold pools of cash. So whenever there is spare cash in the RBI, it should be paid out. Now, the present law is badly drafted. It does not say these things clearly. But I'm sure if the government will ask the Reserve Bank of India board to pay out this dividend, they will.
Crore, which is, everybody is saying about 14 lakh has come back, 14 lakh crore has come back based on the currency and circulation data. So there's a 1 lakh crore number there. There's some gains that the government makes from this IDS 2, the income disclosure scheme 2. Are we fair in assuming that there's some sort of fiscal windfall that could come through next year, which would give the government a little bit of leeway in terms of spending, perhaps reinvigorating the economy, sir?
We have to keep in mind that now India is a big country. So every 1% of GDP is 1.54 lakh crore. So really, these are small numbers on the scale of the Indian economy. Think of the GDP impact. Think of the impact of lower taxes because of lower GDP. It just drowns out this.
Okay, so coming back to Circle, sir, then, given the kind of economic impact that we are speaking about, do you think the economy needs some sort of fiscal stimulus? I'm not sure interest rate stimulus would help at this stage. Would fiscal stimulus help, sir?
Yes, but the moment you said fiscal stimulus, I get back into the debate that took place last year, where there were 2 points of view. One point of view was that the economy is doing badly and we need a large fiscal stimulus, and the other view was we don't have fiscal space. So that fiscal space problem is even greater today now that the economy is weaker than it was last year. So where is the fiscal space? You will have to cut back on some welfare programs and do some more privatization in order to raise the money. There is no easy way to raise money. So we are paying for our sins that we have long had imprudent public finance policy, and so we don't have a lot of space. Again, the key thing to remember is that India is now a big country. So announcements like 20,000 crore, 40,000 crore just don't matter because 1% of GDP is 1.4 lakh crore. It really doesn't move the needle to do a few 10,000 crore here and there.
And also, so we have a large bank recapitalization problem. So even if hypothetically we get some additional funds, you could question where that money needs to be deployed.
So while things are not so good on business cycle conditions, we don't really have levers anymore to do much about them. So again, compare and contrast with Lehman. At the time of Lehman, Reserve Bank of India performed splendidly. Rates were cut sharply. The exchange rate was allowed to go. Okay. Rescuing the economy because it gave birth to a serious inflation problem. Today, we are not good on either of the two levers. The monetary system is a bit snarled and you can't get a lot. It will be pushing on a string because there's a cash crisis and you really don't have that much effectiveness of monetary policy. And we don't have a lot of fiscal space. So when we compare and contrast with Lehman, we don't have much that macro policy can do today as compared with what macro policy was able to do in late 2008.
To start the new year, but thank you so much for giving us a realistic picture on how things are shaping up. Dr. Ajay Shah, NFPFP, speaking to us. Please follow this conversation and all our coverage of the demonetization and other issues on BloombergQuint.com. Thanks for watching.